Hey everyone, welcome to this explainer. I am so thrilled you're joining us today because, honestly, we are going on a bit of a wild journey. Today, we're going to look at complex financial systems through a completely new, wild lens. We're calling it the Monkey Economy Masterclass. We're going to use these simple, everyday mechanics of the jungle to explore how our markets actually work in the real world.
Okay, let's dive right into this. Here is our roadmap for today's jungle tour. First, welcome to the jungle economy. Then, why bananas cost more, leaves. Next, beware the debt trap, followed by investing, growing banana trees. And we'll wrap it up with bubbles, crashes, and recessions. All right, kicking things off with section 1. Welcome to the jungle economy. Let's set some basic ground rules. So think about the very foundation of our jungle. The monkeys here use leaves as their standard fiat money to buy stuff. But, and it's a big but, there's a catch. These leaves are controlled entirely by monkey banks. Every single time a monkey buys something, the bank takes a little fee, and cross-jungle transfers, they take absolutely forever. Even worse, the monkey government can just decide to print more leaves whenever they feel like it, which causes inflation. Because of all these massive headaches, the monkeys realized they needed a system that actually worked for them. So they turned to tangible assets, represented in our jungle by precious bananas. To fully escape that slow, fee-heavy, completely inflationary nature of bank leaves, the monkeys actually invented a brand new cryptocurrency. Let's just call it the crypto banana. Unlike those traditional leaves, this crypto banana isn't controlled by one central monkey bank. It's decentralized. It's controlled by the entire troop. It operates 24/7. Transactions are lightning fast, even internationally. And most importantly, it has a strictly limited supply, so it literally can't be inflated away. Moving right along to section 2, why bananas cost more leaves. Let's look at the engines of inflation. Okay, so we absolutely have to answer the burning question on every ape's mind, right? Why does a banana that used to cost just one single leaf suddenly cost 5? Well, there are 4 main engines driving up prices in the jungle. First, you've got demand pull. This is when every monkey suddenly wants a banana, but the farmer still has the exact same amount, making them super rare. Second, cost push. Demand is exactly the same, but the farmer grew fewer bananas. Third, production cost. The actual banana seeds get more expensive, so the farmer is forced to raise prices just to cover their own costs. And finally, monetary inflation. The monkey government just prints way too many leaves, meaning every individual leaf is suddenly worth a whole lot less. Now, this shows exactly what happens when that monetary inflation gets completely out of control. It turns into a terrifying death loop known as hyperinflation. The government tries to solve high prices by just printing more free money leaves. But obviously, this just makes banana prices shoot up to match the new demand, so they print even more. Eventually, it gets so ridiculous that monkeys literally need entire wheelbarrows full of leaves just to buy a banana peel. At the end of this total nightmare, the government simply burns all the leaves and declares, okay, sticks are the new currency. It's a total, devastating reset. But hey, inflation isn't just about printed money. Actually, our supply chains are incredibly fragile too. Let's think about a critical choke point, the Strait of Hormuz, or, as the monkeys proudly call it, the bendy bit of Hormuz. A massive 20% of all global banana oil tankers have to squeeze through this one tiny, narrow gap. If pirate monkeys start throwing rocks and block this waterway, bam, it triggers a massive cost-push inflation domino effect. Fuel costs spike, making literally everything, from monkey asphalt to simple grocery delivery, way more expensive across the entire jungle. So, the macroeconomy. Total chaos. But let's zoom in for a second. What if an everyday monkey is looking at these crazy high prices, wants a banana right now, but has absolutely zero leaves in their pocket? That brings us to section 3, beware the debt trap. Time to talk about borrowing and credit. Look, when monkeys want bananas now, they head straight to the monkey bank for a leaf card. But the bank doesn't just hand these things out to anyone. They track a monkey's trustworthiness using a credit score. Think about the numbers for a second. 740 is a really good, solid score. 800 is amazing. But if your score drops below 580, well, to quote our primate friends, a score that low is not worth eating. The lower your score, the harder it is to borrow anything, and the higher the interest rates you're going to suffer. But you know, the absolute biggest debt trap of them all is buying a home. Unless a young ape is already rich or just waiting around to inherit their parents' treehouse, they have to get a mortgage from the monkey bank. Do you guys know what the literal translation of the word mortgage is? It means death pledge. No joke. You are signing away 15 to 30 years of your life to pay back the bank in small increments with interest. And oh man, the fees. Getting this death pledge in isn't just one simple payment. You get completely swarmed by these ridiculous hidden closing costs that just drain your leaves. You've got the appraisal fee, the termite inspection fee, the title search fee, the lawyer fee, the recording fee, the transfer tax, the mortgage insurance. Honestly, if you want to buy that 2005 film starring Emma Thompson, you better believe there's a Nanny McPhee fee. It's enough to make any ape drop to their knees and scream. All right, let's pivot to some good news in Section 4, Investing Growing Banana Trees. This is how we actually build jungle wealth.
So the absolutely crucial point here is choosing how you plant your trees. You can be an active investor, staring at charts, scrolling forums until 6 a.m., giving yourself a massive headache trying to perfectly time the market. Or you can be a passive investor. This is where you just practice dollar-cost averaging. You invest 10 leaves every single week into an index fund. You ignore the daily noise, you completely forget about it, and you wake up 40 years later incredibly rich. But listen, whatever you do, do not put all your leaves in one basket. You absolutely need diversification. This just means spreading your investments out. You buy some banana stocks, sure, but you also invest in coconuts, apples, maybe even a little Nvidia. That way, if the banana market suddenly crashes tomorrow because of some weird fungus or a wild TikTok trend, your coconuts and apples will act as a hedge. They keep your whole portfolio safe. Let's break down our asset tier list to see how this builds a solid strategy. Real estate is sitting way down there in D tier. It's super expensive and highly risky if you don't know exactly what you're doing. Index funds, those are a rock-solid A tier. They bundle the top 500 jungle companies together, making them a consistently safe bet. And of course, up in S tier, we have actual bananas. Because as we all know, bananas are rare and bananas are incredibly valuable. And now for the dark side of the jungle. Section 5, Bubbles, Crashes, and Recessions. This is exactly what happens when FOMO takes over. You see, pretty much every financial bubble follows these 4 totally inevitable stages. First up is discovery. A cool new thing comes out, like an AI smart monkey, and a few apes buy in. Second, we hit mania. FOMO kicks in hard. Every monkey thinks the price can only go up, and they're buying bananas just to sell them to someone else for more leaves. Third is panic. The monkeys get hungry, they realize a banana is really just a banana, and they rush for the exits. Finally, the crash. The price just plummets to half a leaf, leaving all those late buyers holding rotting, worthless bananas. And all of this brilliantly illustrates leverage, which is basically the fuel that makes these bubbles so incredibly explosive. Leverage is when a monkey borrows leaves from the bank just to magnify their own investments. Imagine you have 10 leaves, but you borrow 90 from the bank so you can invest 100. If the market goes up 10%, boom, you double your money. You feel like an absolute genius. You are King Kong with an air pump. But if the market drops just 10%, your 10 leaves are instantly wiped out and you still owe the bank 90. If we look back historically, we can see exactly how this played out in the 1920s. The government lowered interest rates, making loans incredibly cheap. By 1925, an astonishing 75% of all household goods were bought on credit. It was this massive, towering house of cards built entirely on borrowed leaves, and it all came tumbling down in 1929 on Black Tuesday. Absolute panic set in, and over 16 million bananas were just dumped on the market in a single day, destroying half the wealth in the jungle. And guys, the fallout from that was just devastating. We entered the Great Monkey Depression. By 1933, jungle unemployment had skyrocketed to a brutal 24.9%. Literally 1 in 4 monkeys had no job. Banks failed by the thousands, and monkeys lost their farms and their treehouses. It is a stark, sobering reminder of what happens when a highly leveraged bubble violently bursts. Which actually brings us to the formal definition of a downturn. Economists measure the overall health of the jungle using GDP, gross domestic product, or as some monkeys like to joke, gorillas do Pilates. GDP essentially measures all the goods and services the jungle produces. When the economy slows down and that GDP number drops for 2 consecutive quarters, the jungle has officially entered a recession. Leaves stop moving, businesses stop hiring, and apes everywhere get very, very anxious. So, after exploring the wild mechanics of fiat leaves, the terrifying realities of the death pledge, and the crazy swings of leverage bubbles, I want to leave you with this one provocative thought. The market always goes in cycles. When the next bubble bursts, and trust me, it will you be caught at the very top holding on to a pile of overpriced, rotting bananas? Or will you have used this knowledge to passively plant a beautifully diversified forest that sustains you for a lifetime? Master your jungle economy, take control of your leaves, and always remember, apes together strong. Thanks for joining this explainer. I'll see you next time.